The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 11th terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And, of course, I believe we should be pioneers of our future versus prisoners of our past. Let's always remember that life happens for us, not to us. And we can make just that one little shift. It'll make all the difference in the world, because that means we can find a gift in every set of circumstances that the universe is going to provide us with. And the universe is always going to provide us with circumstances. Of course, let's always remember that if you're trying to create a breakthrough, and this is it, most everybody's trying to create a breakthrough, there's really just three easy steps. Step number one, you have to change your strategy. If you're trying to make a breakthrough, you've got to realize that the strategy that you're currently using isn't working, right? That's simple. Number two, you've got to change your story. Well, we all have a story. That story usually locks us into doing what it is that we're doing, so you've got to change that story. And number two, you've got to change your state. And that's the easiest thing to do. All you got to do is take in a deep breath, fill that diaphragm with nice air, put those shoulders back, do something. Look up in the sky, do something to change your state out there. And those are the ways, those are the three simple steps to create any kind of breakthrough that you want. Hope everyone out there had a wonderful Wednesday. As always, I am grateful for your presence here today, and I'd love to hear from you. Just pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us as well at 727-445-1044. This is Terrific Thursday. Of course, it's TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow futures are trading up 54 points, trading out at 17,596. S&P futures up 8 1/4. They're trading at 2,034. Russell 2,000 up about 6 points. Nasdaq NQ. Nasdaq futures up 14 points. King dollar on the move here this morning, up 250 ticks, 25 pennies, trading out at 88.55. We'll take a look at the currency market. The euro trying to break out over its trend line. So today's an important session. Will provide us with some good information. Goldilocks back $11 right now. She's trading out at 12.18. Silver back 13 pennies, trading at 17.05. Light sweet crude off 55 cents, trading at 60.38. A quick peek across the globe. We're going to find that over in Europe right now, we've got the DAX. That is up 20 points. The FTSE back 46. Sea of red over in Asia last night. The Shanghai down 15 points. Not a big deal, about 0.5%. Hang Seng off 211, nearly 1 full percentage point. The Nikkei down about the same, 155 points, about 0.9% out there. All righty. So where do we begin our day out here? Of course, if we go back to Monday's show, or last week's show, I believe it was Thursday and Friday, I said we're going to see a bottom, and that bottom probably will come in this Friday, tomorrow. You know, it sure looked like on Tuesday, the way that the market traded, those hammer candles that were created. As an example, if we take a look at the NASDAQ, its hammer candle still intact out here. If we take a look, so the NASDAQ probably the key ingredient to today's recipe for the market is on Tuesday, as the market had pushed down. It was the NASDAQ that truly powered things up. If we take a look at the low of the NASDAQ on Tuesday, it was 42.1675. Yesterday's low got down to 42.19. So that hammer candle, that support line, and we've got really two levels of support inside the NQ as we take a look at its daily chart out here. You've got your TAS market profile low. That's right around the 42.16 level. So an important area, that 42.16. You see a move below that, that's going to set up a deeper retracement. What would that retracement look like? Well, let me switch over to a little bit different tool, make it a little bit easier for you to see and for me to do and to perform for you. So we're going to pull up the daily chart here for the NQ, and that 0.382 retracement level, about 4,094. So if we break that hammer low, I would suspect that that's what we're going to go either to about that range or to the top of that September 19th session. That's that swing point out at 41.18. So the low is here or the low is near. It is as simple as that. I know. And the cool thing is, really, when you take a look at it, if you go back and you look at, listen to last week's shows, Thursday, Friday, what I said was my best estimate of when that low would come in would be the end of this week, Thursday, Friday. I'm pretty sure I said Friday more so than Thursday, but I might have said Thursday or Friday. And what I also said is what we wanted to see was a scary kind of a bottom. Now, we're not seeing a scary kind of a bottom, certainly with regard to price. Nothing like what we saw back in October, but that was really to be expected. But we've seen enough indications out here. Just take a look at that VIX index. You know, yesterday up 24%. The day before, the day before was up 5%, but the day before that up about another 20% out here. Those are the signs of a scary kind of a bottom out there, right? You know, a lot of times people will use that as the fear gauge. Well, if that's what I like to use as the liquidity gauge, but if you want to use it as fear gauge, well, you'd have to say we've had a couple of days worth of fear out there. So I don't know how many people are in my camp out here. It doesn't really matter. Sometimes it is camp run amok, but right now it's a camp calling the bottom with certainty out here. So we're either there yesterday, today, tomorrow is when that bottom should be in and formed. If we take a look at some things here right now in the pre-market that are moving, you got Staples. That's to the upside. It closed at 1482. Trades right now firing off at about the 1633 level. That is positive. Lululemon to the upside. LULU is the ticker symbol. She closed at 4670. Trade out at 4812. Kite Pharmaceuticals, KITE, that closed at 54.37, trading up at about 55. To the downside, you've got Nielsen NV, that ticker symbol NLSN. Right now, trade out at 42.66, so down about $1.10 out there. HD Supply Holdings, HDS, closed at 28.23. Right now, trade out at 27.50. All right, let's go back to the currency market out here. Let's take a look at what's going on inside of the euro. I mentioned to you inside the euro, let's go take a look at the currency futures. That's why we're using live active data. My currency pairs have about a 10 or 15-minute delay. If we take a look at this, we identified this pattern yesterday. Now, we identified this pattern yesterday simply because we were also looking at that breakout of a trend line inside of gold. So there's all kinds of folks. It's pretty tough to find anybody that is bullish the euro. Now, and they're just kind of their outlook is there's just no way. There's just no way. Now, they may be right, but you and I know they'll be wrong as soon as we see it close above this trend line. Short-term trend line. There's some longer-term trends as well that the euro needs to break. And we'll take a look at each of those as well. But first things first. And that first thing is just simply come to, if we take a look at the futures, we're just simply going to take that high from October 15th. We're going to take that high as well from November the 19th. And what coincidentally, and there are no coincidences, happens to touch the high of October 21st as well as October 29th. And then from 2 days ago, December 9th, and then yesterday, price stopped right there, and you can see this morning trying to break through. So right now, you've got price coming back. We're going to say yesterday was just kind of a little bit of a nudge above that trend, but right now, today, really trying to get above that trend line. If we do see that, what that'll signal is something very similar to what it is that we saw inside of gold. Now, in the case of gold, it was relatively easy to identify, where a number of buy orders or people getting out of their sell stops, people getting out of the short positions inside of the euro because of where the trend lines were coming together. If we look at the longer-term trend lines out here, let's go do that. Let's go put those lines on our charts. We're just simply going to, let's see, let's use a different color. Let's use a green color out here. So we're going to come from the swing point high of May the 8th. And here's the real trend, right, inside of the euro futures where I would say at this stage here, that green line, if we ever see the euro break through that, and the first indication is going to be the shorter-term trend. If we do see that, then you'll see a round of short covering, much like what we saw inside of gold back on December 1st, maybe as well. And then really, December 1st, for me, was more, if we go take a look at gold here, that was more about a short covering rally than anything else because price really stopped right at the trend. If we take let me switch back here to the gold contract, just a slight little nuance here. Does it really matter? It's a matter of really the direction of where price is headed to. But if we do go back and take a look at that trend line, inside of, now this is the longer term trend line. I turned the shorter term one off. I'll go ahead and put that back up on my screen here for you, just to try to make the point. Let me make sure I've got a mean green. Come on, work for me. There we go. That's got the green line. Perfect. All right. So if we go take a look at that, I don't know what it did there. Let me try this one more time. Here's the green line is that little shorter term trend line. Of course. Oh, come on, don't do that. My drawing skills. Don't forget, folks, it was in kindergarten that, for whatever reason, my mom was called in, had to speak to the teacher because of my, I suppose, lack of ability to draw a good stick person. Stick man, stick woman out there. Really, they're kind of unisex, right, when you're drawing stick figures? In any event, pretty good, though, with the line tool inside. So I guess I've made up for it with the line tool inside of eSignal software. So there's that green line. This to me, was more of a short covering rally than anything else on December 1st. This here was buyers actually coming into the market area. You got whole kinds of buy orders that were nesting right above that trend. That's why I believe that the move here inside of Goldilocks is real. Really what you're looking to do is buy some type of retracements. In fact, if we put this on some kind of shorter term chart, let's do a 10-minute chart just for the heck of it. So we'll wait for this to pop up on our screen. I might have to switch over to a 30-minute chart just to make it a little bit easier for you to look at. Let me see if I can do this and squeeze it in. You know, we're in HD TV here at TFNN, so if we take a look at this swing point back here right around December the 8th, and we just simply go from that low. I haven't done this. We're just going to go from that low to the high that was put in out here. Oh, man, I got to get rid of some lines. It's going to make it too difficult. Even I'm looking at this saying, what the heck are you doing out here? So right now, let me do this. Let me get rid of a couple of lines on the chart, make it a bit easier. Let's see, trend line gone. Leave that out there. Trend line gone. Okay, perfect. Now, as we take a look at it, from this little low back down here, right around the price level of $11.91. So if we go from that low up to the high of about $12.38, what we can see is price is just kind of hovering, camping around the 0.382 retracement level. Why do I have 2.382 retracement levels? Let me do this. I got a slight problem here. Let me see if I can get rid of that now. Okay, now we'll make it a little bit easier. My apologies for that. I want to make it easy for you to actually see what it is that I'm doing out here. So what we can see is the 1220-ish area. It's right around the 0.382 retracement. Maybe there's a different swing point that I could use back here. Yeah, probably would. Actually, there is. It's right back here. So let's use the correct swing point. Let's do that. And that swing point here is that trading session where I say, and it really doesn't matter, you know, where we had the short cover and rally. So if we go from that low to this high, we're trading right at the 0.382 retracement level as we speak right now. And that is priced out at about 1218.80, and we're trading at 1218.70 as we speak. Here's the deal, folks. If this area here holds, extremely bullish, extremely bullish. Look, if it goes back to 1206, just a normal retracement, set it up the C point. For the next A to B equals CD to the upside. Of course, this is the 10-minute chart that we're looking at for Goldilocks. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures, I should say, up 52 points. S&P futures up about 8 points. Let's go back, take a look at the currency market out here. Let's look at the Euro-Japanese yen. Of course, we know the Euro-Japanese yen, that tracks the U.S. Stock market better than any other currency. At the moment here, having a bit of a bounce, just like our markets. Is there anything that is unusual about this? That's how well it actually tracks. Now, no reversal signal, anything along those lines. Of course, if we take a look at its retracement level off of its most recent low. That was back on October 16th. Boy, hit me upside with a baseball bat. I think our low in the market October 16th. Yeah, no coincidences out here when you come to this currency pair. Now, if it doesn't hold this area, there's a possibility that it runs down to the 143.81. So from a directional standpoint, that would not bode well for the bulls. Would bode well for the bears out there, and that's how you would use that indicator. So no reversal, just a bit of a bounce, just like what we're seeing here inside of the futures market. If we look at the Japanese yen, that is trading out at about the 118.80-ish range out here. Really the same kind of a pattern out here. The low that came in was on October the 15th. Of course, this has done a 1 to 2, A to B equals CD. So to pull back, just move sideways would be normal. No bullish reversal signal or anything along those lines. So it's still just kind of resting, moving sideways out here inside of the market. The Great British Pound, of course, we know the Great British Pound has just been hanging out at the lows right around the hammer hammer candle that it had formed back here in the trading session of November the 14th. If we take a look at that low, you can see, and what to make of this. The only thing I can really make of this is that you can't bust it down. And it has hung out around this hammer. It has tried a number of times. Just can't bust it down. Neither can it really bust it to the upside. Now, because price is just traveling sideways, has been for so many days, for me, putting the trend line on this and say, hey, Steve-O, isn't this thing about to break a trend? We can do that for you. And that would be a excellent point. But for me, here in essence is the trend line that I would put up here. And so you could say, hey, it's very close to being able to break this trend. Let me just turn off the signal box, make it a little bit easier for you to view. And let me turn off the A to B equals CD tool. So there's the trend line for the Great British Pound. But to break a trend by moving sideways, I personally have never gotten very excited about that is a real break in a trend out here. But some might call it that. At this stage here, I'd say the only way that you can see that this thing has made a bottom is to see some kind of A to B equals CD pattern, in this case to the upside. We do not have that as we speak right now. Let's see. So we've taken care of the currencies. Let's go over. Let's take, we looked at Goldilocks back $11. Let's go look at silver. We look at silver. She's trading back about 16 pennies as we speak. Silver looking pretty decent, pretty strong. You know, what silver's done thus far, and in a normal resting spot, if you come from the high out here back on July the 10th down to the low on that session from December 1st, just hanging out at the 0.382 retracement. The exact number is 17.02. The price of silver is trading out at 17.02 as we speak right now. So when we see silver clear this area, and I'd have to say the candle session from yesterday is probably as good as any. When silver can break above $17.35, then you're off to about the 1879 area. In the case of natural gas, we haven't looked at natural gas for a while. Let's go take a look at that. I did see the deep freeze is back. I think it's back. Heck, it's got to be back because it's pretty darn cold in Florida. So if it's cold down here, of course, cold for us is a whole different concept than what most people have to deal with. But if we take a look at the natural gas contract right now, the real key here is going to be breaking through this. And what I can tell you is, I won't even just tell you, I'll just show you at this stage. Why don't I just show you? Let me see if I've got it here. Let me see if I've got natural gas somewhere. I'll try to show it to you if I can find it. Is this it? There we go. So it's this page right here. Let me go ahead and put it on my on the other screen for you. Slideshow from current slide. There we go. Okay. This actually is, folks, I think it's like the last 11 or 12 years worth of average day. Don't pay attention to the prices along the left-hand side. I just should have deleted that. I didn't. What you're really paying attention to here is more so the directional and turn dates for natural gas. Now, not that prices need to always follow an analog, but on average, you know, if you were trading this, don't you think it would be helpful to understand on average over the last 11 years, I think it is. The S&P, I've got the last 43 years worth of data out here. But what this says, in the case of natural gas, typically makes a low right here in the second week of September, makes a high right here in the first week, December 2nd, to be exact. We're now at December the 11th. Makes a high and then pulls back out here. So natural gas, we may have seen the high out here. Hey, look, for it to bounce, for it to move higher, it's got to break above the December 8th high. That's at $3.78. So we'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 72 points, trade on at 17,000.
606 S&P up 12, trading at 2,038. Composite up 28 points, trading out at 47.11. Russell 2,000 up 7. She's trading 11.68. DAX up 40. FTSE back 45. Goldilocks up 11. Silver down 16. Let's go take a look at light sweet crude off a quarter. If you were interested in trading the black gold Texas tea out here, and I would have to say it really needs to be a trade. I just think there's too many other elements going on inside of light sweet crude. We're not there yet, but what I just do want to show you is one of my favorite trading patterns out here, because it's when the rubber band gets stretched in the wrong direction too much, and you're going to see some kind of snapback. So we're not there yet. There's the potential for that. And the potential for that, let's just assume that today light sweet crude just kind of takes it easy. Closes right around here at about the $60.57-ish cent range. I get no idea where it's going to close, by the way. But let's just assume that for this purpose, it doesn't move any lower out here. And then tomorrow, you were to see some kind of bullish reversal signal. Price will have moved lower without the same kind of weakness out there. And that can set up a decent bounce. So we could get a decent bounce inside of light sweet crude. Like I say, would only be a trade. And then the last last time that we saw this kind of a pattern set up was all the way back down here, really around November 13th, but we never saw any kind of bullish reversal signal here. We also did not see any kind of a break on the two moving averages here, the 8 and the 13. The dotted one going across my screen here is the 13-day. That would actually be your first target for where price would head to. You get above that, and then maybe it's a different story, and you're looking at a deeper retracement. We are not there yet. This is not at least on a daily chart, this is not at all a buyable trading bottom. Of course, I'm not after trying to buy the bottom tick out there. Just trying to look for patterns that suggest that a reversal would be underway. So that's it on light sweet crude. So we've covered the commodities. We've covered the commodities. We've covered the currencies out here. Let's go take a look at some things that are moving and grooving in the marketplace. Let's go take a look at Restoration Hardware. RH is the ticker symbol. Cool store for sure, up 9%. Let me see. Are they out with numbers? Looks like the third quarter results. They produced net income of about $20 million. How about this? $19.4 million versus $9.5. Now, I don't know it's same store. I don't know if they're opening up a bunch of stores or not, but their revenue is $484 million versus $395. Boy, this thing has got wide price spread for sure today. Volume is also very good, 836,000 shares, 840. Yesterday's volume, a total of 2.4 million. Let's pull Restoration Hardware back. Does not look to me like it's at its 52-week high or anything. So let's put this on a weekly chart, see if we can see where this is headed to next, where the swing point as it's out here. Well, the swing point that it's dealing with here this week is from June of 2014. It really was probably the July 3rd swing point. That had volume of 4 million shares. Say you're at 5 million shares right now, so it's that's a large A to B equals CD to the upside out here. So that's the 52-week high. It's an all-time high, by the way, and it's trying to take that out. So on a weekly basis, if we just look at the short, the more conservative A to B equals CD pattern out here. Let's go ahead and put that on the screen. Of course, it would be helpful if I put the A to B equals CD tool back up on my screen. There we go. Okay. So now let's go take a look at the lightning bolt pattern. Well, we've got one out here. Let's go take a look at the second one. I want to look at the obviously looked at Restoration Hardware a while ago. Here's your more conservative current A to B equals CD pattern to the upside. So that June 30th, the week that began June 30th, is going to be your B point of the A to B equals CD. And of course, the October lows out here are going to be your C point. So we know the B point is under pressure from a volume standpoint. 4 million, we've done 5.3 basically versus 4. So any close above 94.50 is a confirmation of an A to B equals CD. Now, your one-to-one price projection is 104.99. I don't have really any indication here that price wants to move much more than that, so it's another $10 to the upside. Not that it can't, and if it does take out the 105 area, or I'll say this, if it's coming into that 105 area with volume, a wide-ranging bar, then you're more likely to see a move up to about the 114.56 area. But the chart on Restoration Hardware looks pretty darn good for it. Let's take a look at, let's go look at Lululemon, LULU, up about 9%. I believe they also came out with numbers generating revenues here of, I'd tell you what the numbers are, but then I'd have to kill you. I'd have to kill you because I don't have them. It looks like their net revenues did increase by about 10%. Nonetheless, let's leave the weekly chart. Let's go see what this thing is doing on a weekly basis. Now, Lululemon's got some issues. It's got a supply line out here. That supply line, clearly where we saw this big gap down with volume, a couple of real move down with volume and a gap down that took place. So the supply line inside of Lululemon, about $57 and a penny. I would say at this stage of the game, that's really where it's headed to. It's headed to somewhere right around 55.45 to 57.01. Now let's go take a look at the daily chart. Volume is okay. Taking out the most recent swing point from the week that began November 24th, that at 11 million shares. So volume increasing on the way up, so not too shabby there. But remember, $57, about another $6 to $7 to the upside is probably where it runs into some stiff resistance out there. Folks just glad to get their money back. So we're gapping up today. Second gap. I don't believe we have a three gap. We do not have any kind of three gap play. In fact, the third gap would have to be larger than the one that occurred back here on September the 11th. So if there were to be any kind of a 3-gap play, any kind of exhaustion gap, that's what you would need. Go back and take a look at that gap out here. Daily-wise, you've got Lululemon up above the November 25th swing point, 5.2 million shares. You've done 3 million shares today. Suffice to say, this thing is on a daily basis here, giving us an A to B equals CD pattern. That A point's going to be down here on the trading session of October 15th. Your B point looks like that's up here on November 25th. Your C point looks like about a 0.382 retracement, 43% to be specific, gives you a $55 price projection. That would be your 1-to-1. So again, we've got 55 to 57, maybe a spike into that $59. Now, closing above 57.01, a whole different picture out there for Lululemon, ticker symbol LULU. Got the Dow up 114 right now, S&P up 17. Now, that should not be a surprise to anyone. Certainly, Mastering Probability subscribers, they know the routine based on yesterday's action inside the marketplace. So it's so consistent. The patterns are just simply so amazingly wonderful inside of the market. So we'll see if we'll again. Go back a week ago, go back 2 weeks ago. I'm calling a bottom and said we need to see some scary stuff. Price-wise, the Dow, everything is so close to their highs. We haven't seen a scary price low, but we saw a number of other scary events that you would interpret as bottoming forming patterns out there. Let's take a look at some things that are moving to the downside out here. Men's Warehouse, apparently we're not buying enough. Apparently they're not giving away. Well, apparently they are giving away the store out there. Men's Warehouse and Joseph A. Banks. I think the two of those guys merged. Of course, Joseph A. Banks, you walk in there, and you buy one thing and you get 50 other things out there. I think that's the pitch. I don't know if you really do. Maybe some of you know that out there. Of course, they have to give away 2 or 3 shirts. I'm just not sure if they're shirts with buttons. So, and I don't even know if they say used or new shirts out there. I'm just kidding. Stevie humor early in the morning out here. If we take a look at Men's Warehouse, though, the daily swing point that it's taking out of looks like at least a second A to B equals CD. The downside, you've got 1 million shares. That was on October 15th. Of course, this didn't, a weaker than market stock made a short-term low. Never saw any kind of retracement. That swing was taken out with 1 million shares, 1.2. Today, you've done 546. That swing only had 1 million shares out there. So you've got another confirmed A to B equals CD to the downside. Let's go see if we can identify, without going to the pattern, the A to B equals CD pattern, where Men's Warehouse is headed to. Is this okay? So we're here. Well, okay. So we know. Let's turn off a couple of tools out here, make it a little bit easier. Let's turn off the. I don't need to turn off the A to B equals CD. Let's turn off the moving averages. Okay. So now we got to clean the stock chart. So if I were going to ask you, in looking at this stock chart right now, where is it that you think that Men's Warehouse is going to trade to? You would absolutely. I know you would say it right now. I know somebody's jumping through the screen, and you're saying it would go back to that sign of strength. And you are absolutely right. And that is a nice of you to recognize that where Men's Warehouse is likely headed to is at October 8th, 2013 area. This thing had gapped up with 15 million shares. We haven't seen that kind of volume on the way down. So Men's Warehouse, if you were looking to get long Men's Warehouse, Joseph A. Banks, for whatever reason, you're looking for price to get into about the 35.11, 35.60, somewhere right around that area. It's trading at $40 as we speak right now. If we take a look just at a weekly chart, let's just check out the weekly volumes here, make sure everything is in line there. The weekly volume on that breakout wide-ranging bar. Let me pull this back here, make it a little bit easier for you to take a look at the real wide-ranging bar and really wide-ranging volume. 25 million shares to the upside. You're into it so far this week with 3.5 million shares, and we are in Thursday at 9:44 a.m. So pretty good chance that the actual range here you're looking for inside of Men's Warehouse. Ideally, the ideal trade, and I'm not suggesting that you take this trade at all, but the ideal trade would be for it to get back to 32.46, really 32.45 or lower, close back up above 32.46, do it with less than 3.4 million shares, and that would be a equity coming back to its breakout area. That is ticker symbol MW, Men's Warehouse. If we take a look at Accelerant Pharmaceuticals, XLRN, down about 4% off $1.70 as we speak right now. Let's see if this thing is gap down intercession out here. Now, Accelerant Pharmaceuticals, what it has done this week so far, let's first take a look at what it's done on a weekly basis. The week that began January 20th, there was 2.6 million shares. So Accelerant Pharmaceuticals, XLRN, has pushed into that swing point with volume. You've done about 3 million shares already this week. Now, you're trading back below the low of that swing, 45.81. This says price will be back up there at some point. Now, let's go see what the daily chart is doing out here. Not because it's a high volume high, just simply more so because we pushed into that swing point with volume. So XLRN should be up into that range at some point in time. And really no big deal here on the pullback. No big deal whatsoever. Two nice signs of strength. That was on December 8th as well as December 9th. Yesterday it also moved just a bit higher so far. And those were with volumes of about 1.3 million shares so far this morning, pulling back with about 112. So it'll be back up there post-haste. That's XLRN as the ticker symbol. Also moving here to the downside, I think this has been all across the board out here. Spirit Airlines, SABE. No, it hasn't been all across the board. The board it's been across is basically to the downside. That's right, Spirit Airlines. This is our island reversal. This is the island top reversal. I knew there was something, and I forgot to write it down on my pad of paper out here. So you've got the most bearish pattern at all-time highs inside of Spirit Airlines. And what that says is that that should be a major top. Now, likewise, as we pointed out, nothing more bullish than a failed bearish pattern. We do not have that as we speak right now, and I would say that at a minimum, if we start taking a look at target areas for Spirit Airlines, with the island top reversal, things can get a bit hairy out here. So I don't know what the problem is, but there is a problem inside of Spirit Airlines. The stock chart just simply tells it to you. It's really hard. It's really, really, really hard to form a island top reversal at all-time highs. Likewise, it's really hard. It's probably easier to form an island bottom at all-time lows than it is an island top at all-time highs. And this is a pretty decent island because it was trading up in this area for 2, 4, 6, 7 trading sessions out there. So this says what we ought to see in the case of Spirit Airlines is trading at 72.53. Ought to move back to at least 65 bucks, 59. I'd have to say more likely what this thing does is pulls back to the $52 area. But we might not have done this last week. Let's go see, or this week when we saw the island. Let's go see what the weekly and the monthly chart for this, see what they look like, because this might give us a better indication as to what this is going to do out here. I'm just looking to see if there was any kind of really major untested high volume low, and the answer is no, there really isn't. But what we do have is a high volume low back here during that October 15th time frame. So unlike the S&P and the Dow and the Qs and in the major indices out here, they are not going to get back to the October 15th area. No way. Well, they may at some point in time, but they are not going to get back to it. Unlike in the case of Spirit Airlines, SAVE, that is probably where it is headed to. That's ticker symbol, again, SABE. If we look at, how about this, Lakeland Industries? We haven't looked at that for a long time here. It hasn't shown up on my screen. They are the hazmat guys out here. Luckily, we haven't had to talk about Ebola for a long time. In fact, I think I have that chart out here. I'll show you a chart. It's really pretty cool. In fact, I forgot to mention this to Tom. He's got access to it on Bloomberg. But remember when the markets were crashing down back in October? Let me put this slide up on my screen. Is that a strategic way to get you to come back and see this? It's a very cool chart with regard to Ebola and the volatility index. This is TFNN. You're right.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow 165, S&P up 21, composite up 52 points right now, Russell up 14. So let me show you this chart. Very cool chart. Now it's something that I'm glad that I just remembered about it, because I forgot to speak with Tom, because he's got this is a chart from Bloomberg. So as we take a look at this, and I guess to give you an idea and a feel for how maybe electronic trading, how programmatic trading is working working out there. This is now what you're looking at on my screen is the white line, or the grayish type white line, is the word count, the story count. And I think this is just the story. What I don't know, because I haven't seen the details of it. I'll get that. I will eventually get this. Remember to do this. Get it from Tom. But it is the number of times Ebola was used. Now, this is going back to by the way, to the lows in October 15th. And so the thing here is that the correlation with regard to what we actually, so it doesn't really matter what scares or spooks the market, right? Markets are going to go up, they're going to go down. Of course, this one suggests that things are relatively news-driven. Now, as traders, what our responsibility is to, or as technical traders, our responsibility is to identify those key patterns where we see those reversals. And those are really part of the tools that I teach at my 7-week trading course, which you can get access to. You can join up right now. Just because you didn't see the first workshop, that's no reason to not join the 7-week trading course. You've got access to that on your members page. We've got another live workshop that's coming up after the beginning of the year, January 9th. You've got 7 weeks worth of weekly updates and trades and so forth. So, and just an education that you won't be. And for the money, it's like I ought to just shoot myself. Why did we actually do that for $395? I mean, you're not going to get anything like that. In any event, back to this chart here, the gold line is the VIX index. All right, so if we take a look at the VIX, and so don't pay attention so much to the the prices along the right side, left side, but look at how it is. Very cool. So I just mentioned that because we were taking a look at Lakeland Industries. I had forgotten really all about that, because Lakeland Industries, if we go take a look at its stock chart out here, let's go do that, LAKE. Of course, we probably could overlay, I don't have the tool to do it, but we could probably overlay Lakeland Industries onto that same chart, and we'd see really the same kind of a thing out here. So again, it doesn't really matter what it is that gets the selling going. In this case here, I would say I would attribute it more to the emotion and the Ebola scare than I would to any other chinks in the armor out there. Really gave that. And the other thing is that the beautiful thing, you don't know where it's going to come from, but the beautiful thing is that the market actually moved down into a time period that it should have been during that unfavorable seasonal period where it puts in the low. We're in the favorable seasonal cycle, folks. The high for the market, we're not anywhere near where the highs for the markets are. Because it's not sell in May, by the way. It's not where the highs get made between now and in that time period. So, but in the case of Lakeland Industries, look, I don't even know what's really going on with Ebola any longer. Do you? In any event, this thing is pulling back to the area where it broke out of. So this thing was a very flat base out here. You're trading at 1028. If you wanted to take a kind of 1% interest because of the potential for this thing to not be totally controlled out here, you'd have to say buying this around the 685 to $10 range or 1034. I don't know about right now. I'd have to say maybe the bottom of this breakout session would probably be that's 850, probably around 850. Might be worth depending on the type of trading style that you have out there, it may be worth it. Wow, we're out of time, folks. Thanks so much for joining us on Terrific Thursday. Hope you're having a great day out there. Stay tuned. Hour 2 of the Trader's Edge will be up next. You're off to start your day. Be safe, and I look forward to seeing you tomorrow morning. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.